Good evening, Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for the evening of Tuesday, and we're at the 9th of July, 2024, just after 6:35 p.m. Central Time. Now, the thing you have to remember is everything this week is leading up to CPI and PPI numbers that we're going to get on Friday. For the stock market, you'll also start earnings then. Today started off with everybody hoping that Fed Chair Powell would tip his hand as to the timing of a rate cut if one is coming. And he made you wait about 20 minutes into it, and then he made a statement. If you're hoping that you're going to get an idea of when this is going to happen, you shouldn't watch it. I'm not here to talk about the timing of a cut. And that ended that. So the rest of the time was just spent doing one thing, and that is clarifying that the Fed is continuing to believe the labor market is back in balance. It has weakened 3 months in a row. He pointed that out, not dramatically so, but weakened. I think he's also pointing out that he wants to see CPI and PPI continue down, and the Fed is watching that. They have not abandoned their 2% target, and they are just in a period of waiting to be certain that this is coming down. When asked if it's too restrictive and the other parts was, you can imagine, it was blah, blah. Now, you'll probably get similar type questions tomorrow when he speaks again at 9 o'clock, this time in front of the House of Representatives Committee. You have the Mortgage Bankers Association numbers at 6, wholesale inventories at 9, and as I just said, he'll be talking tomorrow to the House of Representatives, their Financial Committee, at around 9. The EIA weekly petroleum stock estimates will come out at 9:30. We had tonight the API numbers, and we had them drop down in the crude inventories and in gas, but the distillates were up a bit. Fed Governor Bowman and Chicago Fed President Goolsbee, they're going to be participating in a Fed Listen event Wednesday afternoon at 12:30. We'll see if they have anything to say. But as I'm trying to point out to you, the big event, and it's like we're killing time right now, is waiting for CPI and PPI, and that's when these markets will see a lot more life. Right now, all you hear the announcers on TV rightly saying is in the financial markets, not much activity. You have plenty of activity here. Soybeans went under $11 a bushel, so they have been getting clipped. I'm in Chicago, and we're looking outside as we're doing this. We can see through the windows. We have rain, and they're warning the city that we could get up to 3 inches an hour of rain, depending on which way the storms come in from Burl. So it's up this high already coming into the city, and we'll see what that brings. It's interesting how you get all these alerts at night. So when we look at the gold market, again, the market has been sitting in very much sideways action. This is a weekly chart of just closes, and you can see how the market's done that. When we look at a daily bar chart, I pointed out that you would come up before to this resistance point, and if you come back with me here, you can see how the market just came down, held itself, bouncing back and forth. The bias of the market is going to be up, and the trend is up. Why? Well, the trend is on the swing line, higher lows, higher highs. I already know it's holding the 18-day average of closes. I mentioned yesterday that the battleground's probably around the 2347 level, and it is. And on the upside, it'll be the upper Bollinger Band around the 2389.80 level. In terms of momentum, you have worked off an overbought condition. So the market's getting itself ready for CPI, PPI events. The silver market remains stronger than the gold because whenever you're under the 18-day average of closes, then the bias is down. The bias down means, just think of what I'm walking you through here. As these numbers fall, what takes place? You need less ounces of silver to get 1 ounce of gold, which means silver is gaining on gold. And we have had a constant pattern over the past 2 weeks of higher lows, higher highs, right into the wall of the upper Bollinger Band where the resistance is shown. And unlike the gold, you are in an overbought condition that hasn't yet begun the process of trying to get both these numbers over 80 and flipping from overbought to locking in a momentum trade straight to the upside. Haven't done that. The copper market had that vertical price rise that we spoke about. It started in an attack of the 100-day average in the lower Bollinger Band, got up to the upper band, and has faltered ever since then. It is working off an overbought condition. Tonight, when you reopen, you just got back under the 70 level. If I take you into yesterday, which is today as I'm recording, obviously, for Tuesday, you had a 71 reading, as you can see. You're just getting under that in tonight's trade. When we look at the platinum, you've returned to what I call the line in the sand, the 18-day average of closes where markets try to figure out what to do. Momentum is down. There is no trend. You have a lower low, higher high. I just don't see anything. Then we have the dollar index where we've got the market with lower highs, lower lows. We hit the Bollinger Band area yesterday and we're getting our bounce out of it. Again, an oversold market, but very much waiting for CPI, PPI. Low numbers give the Fed the month of June in one of those months. I think they look for 3 months of weakness and things. As the Fed chair said, they have the labor now in 3 months of decline. Now they want to get, I think, they love to get 3 months in a row to say, they believe that they're at the point where they can make a cut in rates. Do we need it? Well, the stock market tells you no, but the economy's starting to say in a bit yes. The stock market was at first, they're going to raise rates. Now it really, not raise them, they're going to cut rates. And it believes they're really going to cut rates again. But I'm going to repeat, when the Fed finally does it at the levels you're at, have you anticipated that and where you're going the next 6 months? So be a bit cautious. That would be the wise thing to do, in my opinion. Now, have to remind you, we're going to be talking about that and a lot more. If you're a grain trader, you have the WASDE report coming out this week. We'll be covering that. That's where you get everything. In fact, tonight, my market letter's all geared to that. Then tonight, I'm also including with my letter the EIA July forward look report. So what do they see the EIA for the rest of 2025? This comes out regularly. It gives you breakdowns of everything for the where the energy is, where the demand's coming from. Meat markets, a volatile market right now, and coffee caught on fire. If you're a coffee trader, you're seeing that. So we put this all together, give you ideas on the markets. How do you get all this? It's simple. You go to iraepstein.com. And under the word free offers on the top left, everything is there. You can also click right up here. When you get in there, you'll see there's a list of all our free offerings. Choose what you want. It goes into a cart. When you're through, at the very bottom of the page, it'll scroll. You just scroll down to it, put in your name, your email. We'll get everything out to you. If you have a message for us, put it in there as well. I'm Ira. I'll catch you first thing in the morning.